I'm going to allow the panelists to announce themselves and who they are and give us a 1 minute on just their background. Nikki, you want to start?
Sure. Can everybody hear me okay? It's on. Okay, I hear it. So my name is Nikki Caboose. I'm the CEO of South Florida Tech Hub, and basically we are a technology nonprofit that covers Miami-Dade through Martin County. So that's Miami, Broward, Palm Beach, and Martin counties. We are currently the only fully regional technology nonprofit in South Florida, supporting anything that is basically, it's very broad, under the realm of tech, innovation, and startups. So we have startup companies, seed stage, pre-revenue, all the way through the big guys like Office Depot that are part of the members. And we do everything from networking events to educational workshops, a lot of pitch competitions, pitch workshops, which I'm sure they'll talk more about, and just really anything that we can do to support the tech ecosystem in South Florida.
Thank you.
Great. I'm Mark Volchak, one of the founding partners of Las Olas Venture Capital. We're a Fort Lauderdale-based venture capital firm. We focus on seed stage investing into B2B startups, essentially. But we started back in 2016 before, I think, a lot of the craze and the pandemic and a lot of other things that have affected South Florida. So we've kind of seen the evolution. I personally moved to Florida back in 2007, so I feel like I'm as local as you can get these days. So about 15 years. And so I've been very involved in the community and in some of the Miami initiatives, sort of, pre what we have today. So, excited to talk about all that.
So I've got you beat. I'm born and raised South Florida.
One of the very few.
Yeah. Hi, my name is Tal Milburn. So I am a partner with Seed Funders and also a member and investor with New World Angels. We're the largest angel network in Florida. So I am a former Silicon Valley guy, so I spent 30 years in Silicon Valley working for such companies as Cisco and Visa. I moved out here after I exited my startup in 2019, so I've been a resident since then, and now I just do technology, I advise startups, and I invest.
You want to tell us what that company was that you exited and what space was it in?
Yeah, so in 2015, I started a company called LifeState, and it was an IoT healthcare startup. We pivoted 3 times trying to find the use case that would really make some traction. And so started 15, exited in 19 to a Swedish conglomerate. And it was okay, but I'm more of an investor than I am an entrepreneur. That's why I have so much respect for entrepreneurs.
Fantastic. And so I have to say, it's been pretty amazing what's happening in South Florida. There are a number of cities that are trying to become the next tech hub, right? New York is vying for the title. You got Austin. There are a number of others. And South Florida has done an amazing job. And I wanted to start with, kind of a interesting topic that's been in the news lately. A lot of cryptos come down here. A lot of just financial technology has come down, and there have been some challenges in the market. What do you guys think about just the fintech ecosystem and the future of fintech in South Florida?
So I think there's a little bit of a risk in being a one-trick pony, so being only crypto. However, I've had some interesting conversations with FAU, for example, and they're trying to be known for artificial intelligence. And if we can do that, in addition to doing the whole Web3 thing, particularly crypto, I think that would be huge. That we're known for 2 or 3 things. The other thing that we need down here at this point is if you look at every tech hub in the United States, they're always near a world-class university. There is no school in the state of Florida with computer science in the top 10 degrees, and that's a liability. So I think that there are forces that are trying to remediate that. So, but it's important that you have an intellectual center, I think, but we're getting there. So, and quickly.
That's an excellent point. Mark, any thoughts?
Yeah, I mean, I think, I would say that there's a lot more to sort of the South Florida ecosystem than just crypto and some of the things we're seeing in the news. I think every technology goes through sort of this bubble phase, and then things get sorted out. Some of the companies that don't make sense get pushed out of the market, and other companies are more successful. So I do think we're going to see a shakeup in crypto, in a lot of the fintech technologies, just like we saw the 2000 .com crash and the '08 financial crisis. And we'll see a sort of crisis of crypto and blockchain and Web3, and things that make sense are going to continue forward and become really big success stories, and others will get shaken out of the market. And there has been too much money invested in things that maybe don't make sense. And again, that is sort of the bubble and these sort of waves we see in every new technology as they get adopted. And so I think South Florida has sort of benefited from some of that. But I think also from just the quality of life and lifestyle, we've seen the decentralization of sort of tech hubs over the last sort of really decade. People are more able to start companies or work anywhere. The cost and the threshold to start a new company is much lower than it was 20 years ago. I was an entrepreneur and started my company in 1999. The first thing we did is buy big servers and put it in a closet, and that's not what startups do anymore. And so I think it's just very different, and that allows places like South Florida where people want to live here and can start their company here, can start anywhere. And I think that's really what's changed over the last decade and we've benefited from.
Thank you. And Nikki, I'm just going to have to say before you go, it's great to see you in person. I think I've seen you on LinkedIn for years, and we've been like really close on LinkedIn, back and forth with all the tagging, and now this is the closest we've actually been face to face. So I want to say it's great to actually semi-meet you in person, or
Well, great, thank you.
Yes.
So with that, go ahead. Give me your comments, please.
Yeah, well, I just wanted, I agree with everything that's being said. The only thing I wanted to add is I think a lot of times when we talk about tech hubs across the country, people often compare. And there are things that are comparative, and yes, I agree with education. We have a bunch of great universities here, but I agree, we don't have one that is known for graduating a top quality student tech careers, and that's their top degree. But also there's for most of us, especially like I was saying, born and raised Floridian, there's a love-hate relationship with areas like New York City, because South Florida is the #1 place in the country where people from the Big Apple come here, and we have the highest concentration of them. So it's like, whether you love them or hate them, they're here, and they're bringing a lot of highly affluent people. There's a lot of companies, business owners, a lot of investors, and Palm Beach County in particular, especially South Florida as a whole, but Palm Beach County in particular is actually being called the Wall Street of the South, where there's more financial and fintech companies moving to South Florida and Palm Beach County than any other place in the country. Sure. So I think it is a huge benefit, and even though I know, again, we often compare, I think New York especially, that we do welcome a lot of them, and we do have a lot of New Yorkers here. And I know that with the Web3 thing, there's a lot of Twitter back and forth between like Mayor Suarez in Miami and Mayor of New York City, going back and forth of who's going to be the top crypto capital. We're still deciding that, but I have a feeling it'll be South Florida, but I'm partial.
So TMC is based out of Connecticut, the parent company of the show, and it's the same thing in Connecticut. It was once I guess we're still the hedge fund capital of at least the country, if not the world, and a lot of people are coming down. So it's not just New York, New Jersey, same thing. And that kind of leads me to the next question, and that is that there's a big disparity between the income tax rates of those 3 states I just mentioned and Florida. And that gets us to a broader question, and that is just, the policies of governments, state governments, local governments, and how that affects the climate for businesses and the decisions business owners make as to where they should locate. What are your thoughts on that?
So if I compare the taxes, obviously, California has a state income tax, which is very high, and we have no state income tax here, which is a big positive. Now, one thing that you don't hear about a lot is the property taxes in California are half of what they are here, okay, as a percentage. Now, the homes are much more expensive there, but the tax rate is about half. Probably the biggest difference is the lack of regulations. So in California, you can't, step sideways without breaking a regulation of some sort, which is an impediment because, you're running you're always running concern that, that there's something that you need to do or not do or whatnot. So that's a big thing. So we have a pretty inclusive, open arms environment here, which is positive.
Yeah, I mean, I would say clearly the policies are important, the taxes, but I do think ultimately people make decisions on where they want to live. So I think quality of life and lifestyle is actually probably the first reason. And then people justify that with, well, there's also less taxes and there's better business environment. And so I think those things are all important, but ultimately it's about where people want to live and where they think they can be successful. And so I think that's really important. But I do think politically, over the last decade or two, Florida's done a good job is attracting all kinds of businesses and being open to working with business. It's generally been a lower cost of living, which I think has been changing over the last few years. But the advantage of getting inexpensive housing, inexpensive rent, inexpensive ownership was really important. Again, that's a problem we're now running into. South Florida has become so popular that housing has become very expensive. We're seeing all the reports on, huge increases in rent and ownership and interest rates to buy things. And so there's going to be issues around that. And hopefully Florida will continue to do really smart things like build more housing and focus on workforce housing and all the other things that I think have enabled the growth to date and enabled the huge population growth over the last 20 years that we've seen in South Florida.
I think you just said everything I would have said, so ditto to that. I said the only thing I would probably add to that is that I know, one complaint that sometimes we'll get in South Florida is that we don't actually have a lot of state incentives. I mean, other than obviously the tax benefit, there's not a lot of incentives that companies are given to move their companies here. And I think that's because maybe we are a little spoiled with the work-life balance and, like you said, all of those additional benefits. So, but I think it would be nice for companies because, it is something that on paper, it looks better to have some incentives and have something for the company. So hopefully, because I know that's a big discussion, especially with Enterprise Florida and a bunch of those organizations. But that's the only thing that I think right now in South Florida is missing for us. But again, I think, if you look at the work-life balance and all of that, it levels itself out.
Thank you, Nikki. So this next question, it's a bit broader. It's just about markets in general. If you were to rewind maybe 3 months ago, when some of the high-flying tech companies were raising money, fintech, especially some cybersecurity, the valuations that these companies were seeing were maybe 100 times their annual recurring revenue, occasionally 200 times. And recently, as maybe 3 weeks ago, 4 weeks ago, when I looked at it, the highest flying public companies that were recurring revenue-based cloud companies, they were trading at 7.2 times. So the question is, what's going to happen in the next 6 to 18 months, in your opinion? And the reason why this is important is there are people looking to sell their companies, and the market fluctuations have decreased valuations for companies looking to sell, but also companies looking to raise. There are different levels of companies that are looking to raise. You've got your seed companies that are trying to just figure out, what do I do? Do I go to VCs now? Do I go to my friends and family who might be less sophisticated and they may not hold my feet to the fire on valuation? And then you've got the second set of companies, which are these companies they've raised a Series A or they've raised a Series B at maybe a triple-digit valuation, and now they've got to figure out what do they do to get to that next round, and what will the valuation be? Will it be a down round, and in which case, what do you do to keep your morale high within your organization because you've got employees with stock options underwater? So it's a loaded question. There's so much there, I know, to unpack. I'll let you guys take whatever piece of the question or all of it and answer as you best see fit.
I'll let you guys start because this is totally your realm, and then I'll add anything.
Yeah, sure. So, it's a great question, and a question I get asked a lot. I just came from a conference in Toronto I was at for the last few days, and that was the recurrent question I got from a lot of entrepreneurs, but also other investors that are maybe new to the market or maybe more on the angel investing side. And I think the answer is very nuanced because it really depends on what stage you're at, what the history was of what you raised. So there's no easy sort of one answer fits all. But I think to give you sort of my general view, and the 100 times revenue feels like ancient history. It's like 9 months ago probably. Like September, October was probably the peak of these, what I would call crazy valuations that really never made sense in my eyes. And I think some of the Silicon Valley firms might disagree with me, but they were really investing at 100 times revenue based on the hope that somebody else will pay a crazy multiple next year. There was really no underlying fundamentals that justified, a $1 billion valuation with sub $10 million of revenue. That just didn't make sense. And so I think, what we're seeing today is really a reversion to the mean and probably beyond the mean and actually lower. So part of what we're now seeing is the public companies are trading below sort of the 10-year average multiples. They're just too low. And if you assume that those companies are going to grow and be leaders in their space and actually be big successful companies, they're really trading below value and are probably a good buy today. So what that means for the private markets is sort of different depending on the stage. So if you're a later stage company and you raise that hundreds of millions of dollar valuation, you're trying to raise your next round, the best hope is to try to grow into as much revenue as you can quickly and wait a little bit for multiples to come back up. Because I do think we're too low right now relative to where I think we'll be 12 or 18 months from now. Will it be this fall? Will it be next spring? Really hard to predict. I do think things will normalize and people will say, 7 times is too low. 10 times has really always been, at least in my mind, the baseline. I always tell companies 10 to 20 times your revenue at sort of the Series A is about reasonable. Today we're seeing that on the lower end. Anything above 20x was always a bonus. So if people got 100x, and we had one of our companies raise last fall, and that was great. There was a lot of secondary, so the people who sold were very happy 3 months later. But the people who bought may not be so happy. But these are big funds that are making long-term bets. And so from their perspective, yeah, they may be underwater today, but if that company grows from 10 million revenue to 100 million revenue, they'll be fine. And I think that's really the key. So as an entrepreneur, from a timing perspective, I would say, if you can wait, I think waiting is good. I don't think it's going to get worse in terms of the valuation environment for private early stage companies. But I'm not sure how quickly it's going to get better either. So it could be that, come September it might be better, or it might take till Q1 or Q2 next year. It's really hard to know when that's going to start freeing up.
Thank you.
Yeah. So what he said. So a lot of, because we're early funders, we're an angel and so forth, a lot of times our job is to educate the founders about what's reasonable. If there's anything that is connected to a blockchain at all, they're asking for 10 times too much money. So they think that, this is a hot area. And the scary part is that, 1 in 50 of these will get that money from some person who feels like they need to invest in this space. And so they put some stupid money, what we call stupid money, towards it. So usually private investments. So, but like I said, part of our job is to educate. The public markets, the PE ratios are kind of stupid right now. They're stupid low. I think everybody it's almost like they got angry. And so we're going to, kill this stock. So I think we'll see that bounce back, but I think it'll be at the end of next year.
Oh, you think we're going to have to wait until the end of next year before those valuations return to the mean?
If you listen to all the bankers, if you listen to the regulators, if you listen to the feeling is that it's end of 23. Yeah, so hopefully we're wrong, but I think that would be conservative. The middle.
Okay.
Yeah. So as we get nearer to the next election cycle, I think that will also get things bumping up.
In other words, the government will not allow the economy to be totally destroyed during the time when people are going out to vote.
Well, that's kind of their job. I mean, in most cases, but
well, they're fighting inflation, right? So they're raising interest rates to fight inflation, which slows the economy, and so.
To be honest, we're in an uncharted territory. So, I mean, even the smartest economists at this point are just saying, how about if we do this? I mean, there is really no playbook for this. So we're doing the best that we can. What's unprecedented is that we have the tech stocks hit so hard, and that came seemingly out of the blue.
Right.
So,
So, I mean, my theory on that is that there's just been a global margin call on all assets, and that's where the money was. And so when we talk about punishing those companies, it's that's where the money was, and you had to liquidate, and you got a call from your broker, and you had to do something. You had to sell something. You couldn't sell your Bitcoin that you just bought at 60,000, so you had to sell something else. All right, well, that leads me, and I'm glad you set me up for my next question, and that is that, do we think, I've been unfortunate enough to live through a lot of recessions, and some were tech recessions, like 2000, felt like from 2000 until 2005 we were in a tech recession. That was really bad. 2008, tech was not really affected so much. I have a feeling, I have a theory that recurring revenue businesses, cloud businesses, SaaS, whatever you want to call them, are somewhat insulated from a downturn because they have known churn numbers, and the customers need those services to keep their businesses going. But more importantly, a lot of the technology at a conference like this, and not just this conference, but others, this technology that we're seeing today is productivity boosting technology, but it's also worker replacement technology in an era where we still have millions and millions and millions of open jobs, so many open jobs, and a lot of workers are struggling. I'm sorry, a lot of companies are struggling. So with that, the question is, do you think tech will be, and I know the stocks right now are slammed, but do we think that tech will be one of the silver linings? And a lot of people out here are not necessarily investors, but they own tech companies or they work for tech companies. They're obviously working in tech. What's the future for them for the next couple of years in your mind?
I think because of the situation, this provides an open door for some new technology. I am very, very bullish on so-called generative AI, so conversational AI and generative art. And there are some new categories for AI that will end up replacing the jobs that are left empty right now with workers. We saw a vendor yesterday that has, a conversational AI that will take a customer service call and there's no human involved at all. So, and it is highly interactive, it is unexpected, and so forth. So I think that there are some technologies that will rise quickly because there is a problem hiring people in those positions, and the technology is getting that good. So when it comes to generative AI, it's just amazing at this point, in my opinion.
Yeah, what I would say is maybe more general level, not specific technologies, is that I think the sell-off is always very quick and across the board because people don't have time to figure out what's going to work. Companies don't have time to react. So investors kind of just say, well, let's sell off everything. And I think that's sort of what's happened over the last 6 months. I think now, and that's why I have hope for this fall or the spring, is not that the market will go back up and everything will be great, but it's that investors will say, okay, the sort of sell-off we're done with, the margin calls, we've cleaned up a bunch of things, and now we got to figure out where do we place our bets. And I think that's where we're going to see much more specific, sort of certain technologies, have a big advantage over others. But more importantly, I think investors are looking, particularly in the private markets, are looking at who are your customers. And I think that's one of the things we've coached our portfolio companies is if you can, look at your segments and say, okay, these segments are going to be hurt, so let's focus on the segments that aren't. So over the last few years, people selling to travel has been a really, really difficult business when there wasn't a lot of travel. We have companies that have like a government sector and have a sector where they sell to big companies. Maybe you focus on government. Government's not going to get hurt. Their budgets aren't getting cut. They're buying technology to do things. Maybe we focus on that sector for a while big companies might get their budgets cut and don't want to buy new technology. So I think who your customers are is really important. And I think startups, for example, that were serving other startups is going to be a big problem. A lot of startups that are going to go out of business are not going to raise more capital. So if your customer base are companies that half of them won't be around next year, you're going to have a 50% churn rate for nothing that you did wrong. And so it's really important to think about who your customers are, how can you diversify that customer base, and that, I think, will determine ultimately how successful companies are in maintaining and growing their valuation over the coming year or two.
I did want to add one thing there because I agree with everything you guys are saying, but I think one part of the conversation that caught my attention in your question was, we're talking about, I do think tech is very much insulated. I mean, we saw that through the pandemic. I mean, it's one of the areas that really, if anything, rose in investments and, companies opening startups, starting. And, but also there is that question a lot of, is tech going to replace me? Is AI going to replace me? What am I going to do for a job? And the talent question comes up a lot as far as people being out of work because of tech or, not having the right skills. And I think that goes back to your point, Tal, is that I do think the universities need to step up because the one thing that I love seeing in my role with what I do is we work with a lot of the universities, the local boot camps and coding schools, even getting students exposed to STEM and tech careers in K through 12 so that they know what opportunities are there. But the one thing is that I'm seeing is that a lot of the local boot camps are being able to be much more agile. And, there's already boot camps that have like all this data science, AI, you're familiar with Boca Code, is already implementing like Web3 classes. Like the universities are not able to do that right now. There's too much regulation and red tape and it takes years to get something implemented. So I think there's definitely gonna be an issue with talent as a lot of this new tech starts to take over. And that's kind of what I'm interested in seeing what's gonna happen because I think we're already seeing a lot of these boot camps are really starting to like raise the bar when it comes to competing with the universities in tech.
Thank you. Next question, I'm going to ask for some audience participation. How many people, since COVID, now allow their workers to work from home at least one day a week? Oh my God, that's like 50%. How many people allow their workers to work from home every day if they want? Oh my God, it's the same number. It's about 50, 60%. All right, so it seems to me that the states with better quality of life and I don't know if you put income taxes in there as a factor. I guess it is better weather, other factors, maybe beaches or things like that, vacation areas within the states have an advantage in this new world where people can work from anywhere because it's not necessarily the business bringing the people to, it can be the business bringing the people, but it's the people bringing the people, and subsequently the businesses being developed in the states that are friendliest to the people. So just like technology in the last 20, 25 years, you guys have probably seen, technology has become democratized where it used to be the IT department. Mark, you mentioned a closet. We put all the stuff in a closet, but back in those days, IT, they ruled. And the people had little say. But then at some point, people started to bring web browsers into the office. They started to bring Macs, iPhones into the office. And eventually, we democratized IT. And now we're democratizing literally just like states where we live, where the next innovations are going to come from. So do you guys think that's a big factor in why Florida is going to become a huge tech hub going forward?
Oh, go ahead. Oh, I was just saying, I think, when you were asking the question, the first thing that popped in my head was my husband, because there was an opportunity for me recently to move out of state for a job opportunity. And, I was talking to my husband about it, and he basically looked at me straight in the eye, and he goes, we basically live on an island with a beach year round. He goes, why would we leave? He goes, you can do all your job, everything remote now. He's like, there's no reason to leave. Like, why would I go, in a landlocked state? Why? He goes, we live where people vacation. So when he said that, I immediately was like, okay, got it, we're not moving. But I think also is just that, we do often, and I'm fairly vocal about this too, is just that, I think in South Florida, I don't want to say it's a mistake, but we often use the beaches and the sunshine, and that's how we market things all the time, which is great. And yes, it's a huge icing on the cake, but I think one thing that we really forget about is not only just the business community and the climate here, but is we are one of the most diverse places across the country when it comes to talent and cultures and languages, and it's proven data that the more diverse a company is, the more revenue they're bringing in, the more innovation, and there's a ton of statistics to show that, and I think that's something that we just never really talk about, but we're literally the gateway to Latin America and the rest of the country and the rest of the world. And I don't know, for me, I just feel like that's a huge benefit that we just don't talk about. We're always selling the beaches, but to me, that's just kind of like the cherry on the top,
Yeah, I would agree with that. I think there's actually a big risk on selling too much lifestyle and beaches and a great place to live, because I think that's actually one of the problems. And maybe we should talk about, as an investor, because we do invest in, all across the East Coast. And one of the things we see is that there's too many companies or startups in South Florida who really feel like lifestyle first, startup second, and that's just not how it works. Yeah. If you're doing a startup and you're a startup CEO, founder, you're going to be working 100 hours a week. You're not going to see the beach for the next 5 years. So, and if your plan is to sort of work 9 to 5 and not answer your phone on weekends, you shouldn't be a startup founder or CEO. And so I have this conversation much more in South Florida than I ever had in New York. In New York just doesn't happen. People, work first, work second, work third, and there's nothing else. And that's really what a startup is. So I'm a little concerned that is one of the things we see in Florida. We have a lot of startups, but a lot of startups that have no product, no revenue, no business. And that's not really a startup after a while. And so I do think there's a real danger there, and marketing everything as sun and beach isn't really productive. If I was running a 100-person startup, do I really want to move where there's lots of beach and fun all the time? So it's actually a real danger. And I think the other thing to your question on work from home and work-life balance, I think the balance is going to go back a little bit towards work in the office. Not for all positions, but I think this idea that offices are dead and people aren't going to go back, we're going to see, I think, continued progression back towards where we were 5 years ago. Not all the way back. There's no question that companies will be more flexible. Certain job functions, people work from home. But I think there's going to be a lot less work from home 3 years from now than there is today.
Interesting. Okay, thank you.
I would add that it probably depends on the position. So in the companies that I talk to and the people I talk to across the country, they cannot get a developer to come into an office. You just can't do that anymore. I mean, every developer, whether you're Southwest Airlines or you're a startup, it's all being done from home.
Southwest Airlines can't even get pilots. Forget the developers. I mean, that's
They
what
work
this.
from
Yeah,
home.
they're working
Yeah,
from home
exactly.
too.
That's a different story.
No offense to Southwest Airlines, I just want to say it's a broad airline problem across all airlines. No offense to anyone who works for Southwest. So
Yeah,
please
I have
continue.
a brother who works for Southwest.
Okay,
that's
there
why I
you
used
go.
that example. But so I think it's position. Now, one of the things that I don't think we necessarily want is to have all the mid-level jobs moving to Florida because of the beaches and the whole 9 yards, and all the high-level jobs like the CEOs and all that stuff staying elsewhere. So that's going to give us some economics down here that we're not necessarily going to like. So I think that I think it's going to depend on the roles, though. At this point, you just can't find certain jobs unless you're willing to do remote. But you do need to have the in-person experience, and if you don't, then you're going to have to, 3 times a year, pull the team together in a location so that they can all, because there's a social element that you've got to have if you're expected to work. But kind of to your earlier point about bring your own tech, people more and more are working exactly the way they want to work. So they're using their own tools, they're dressing the way they want, the whole 9 yards. So that's something that's a genie we can't put back in the bottle at this point, I think. So, and the idea of maybe even on jobs where it's in person is that they need to have every second week, they need to have a day off at home, or a day at home, not off. That's everybody has to be real clear on that. But at this point, it's hard to even attract employees if it's literally 40 hours in an office. You just can't do it anymore. So you can be, mostly in the office or not in the office, but 100% in the office. It's going to be a hard sell these days.
Yeah, I remember, I was just wanted to add a story of the work one day from home. My mom, must have been 15 years ago, she was an internal auditor at a large bank, and they wanted her to work from home one day a week, but she couldn't connect her computer to the internet because it wasn't secure. So she had to work from home without her computer. So that was great, she loved it. She said, I had my phone available if they called me, and otherwise I did errands all day. And that was work from home. And so again, we're a different world today, but I think that mentality, it's going to take a long time for us to figure out what that really means and who it works for and how it works and how we monitor employees. And, at my company, 15 years ago, we had 400 work from home people out of 1,000. So 40% of our workforce. But they were part-time customer service reps. And people said, well, how do you monitor them? I said, the exact same way we monitor our call center. We have tools, we have dashboards, we see how many calls they took, we see how effective they are, we see the average call length. So you could sit in your hot tub and answer calls. I don't care, as long as you answer, 20 calls per morning or whatever the ratio was we needed.
And these are audio calls. I just want to verify
these were
the hot
customer
tub.
Service,
All right.
yeah.
Okay. Good.
So it's really a question of what job function, how do you monitor it, and what can people do. And I think it's going to take a long time for us to figure that out.
So I was going to add one other thing that I thought was interesting. I know a couple of real estate agents, and they're telling me that the ask fors are completely different than they were 2 years ago. So just to do when I go to some Zoom calls with investors, we may have 40 people, and about half of them are in a home office, and the other half are working from a laundry room, or whatever, because they don't have a space. So one of the biggest things in real estate now is to have a home office. It's like nobody's looking for a house anymore without at least one home office.
Right, that makes sense.
So, so once they do get that home office, they're going to expect to use that home office,
right?
Or they're not going to take a job. So, I think that more and more people are going to, if they accommodate remote work, they're going to embrace it and insist on it, particularly if they can.
I did want to add one thing there to a couple of your comments was, I think, so earlier on with the question, we were talking about, overselling the beaches and all of that. And I won't mention any company names, but one cool thing about my job is I get to talk to a ton of different companies all across South Florida, hundreds of them, and getting feedback on these type of things. And a lot of times there are questions about, work from home and talent and PTO and what should I do about this? What are other companies doing? And I have to say, one thing that popped into my mind, again, no company name, but there is a struggle right now, especially with, all of the buzz around Miami and everything that's going on. I've had a few companies reach out to me and say, we're overselling this work-life balance and the beaches and all of this, that now my whole development team is going out every night and partying and I can't get them to actually work. And so it is becoming an issue where we're overselling the partying and the beaches and the lifestyle and whatever, and now it's like, okay, can I find some workers? So it really is becoming an issue where we've had a couple of companies reach out to me and say, we're considering moving out because there's too much of like a party scene, and they're thinking they're not taking it serious enough. But then also there's companies that I think you're very right on, Tal, is that, there's a lot of companies that are already, we're seeing, that went completely remote, are getting back now in the office, but the one department that is not back in the office is tech. They're like, look, we already can't find enough developers. There's already a talent shortage. We could care less where they work. Tech, they're tech folks. They're more technically savvy. They can work remote. They don't need to be in an office. I think the one exception to that rule is there's a lot of companies, especially the larger ones, that have a lot of great internship programs, apprenticeship programs. Sometimes you need somebody to be young that you're training, sitting next to you, showing them things, doing it in person.
Right.
It's the remote work for the young ones, entry level,
Good point.
is definitely struggling. And we've noticed even a lot of these larger corporations with hundreds and thousands of employees are either halting or trying to alter their programs in some way, and it just doesn't seem to be quite working. So
It's
I
very
don't see
challenging.
that going completely remote or staying
But then you
remote.
need an office for them to go to.
Right.
If the whole company's working from home and you're trying to get interns to be trained, how do you? The only thing I can think of is screen sharing the whole day, where they're just like looking at your screen to see what you're doing. But even then, like, you have to almost be on a Zoom call with them along with the other Zoom calls you're doing. Like somehow we have to find a solution to that to train the next generation. So we have time for some audience questions. I mean, I feel like the luckiest person where I get to talk with these brilliant people and ask them questions. But if you guys have any questions, just raise your hand. If not, I have a ton more. Great, okay. Fantastic, thank you, audience. All right, so you guys see some of the coolest things, coolest technologies, coolest companies. Tal, you mentioned AI as another area. What are you seeing, like if you have to look in your crystal ball the next, I don't know, 18 months to a few years, what are the hot areas of tech? If you could just rattle them off, like what are some of the things we should be looking at? Maybe some are more speculative, just, just rattle them off, tell us what you think.
Yeah, I could talk an hour on it. In fact, I do a class called Machine Learning for Investors. So AI is just completely amazing. There's this technology that was done by OpenAI, this group that was funded, it's owned by Microsoft now, it was funded in part by Elon Musk and so forth and so on. And Elon Musk made the infamous comment that he was afraid because it's so good. There is a technology called GPT-3 that is so amazing, and they're working on 4 and 5. And these are technologies that would pass what is called the Turing test, where you cannot tell that you're not dealing with a human. And that's what a Turing test is. They're just some amazing technologies. And I think that, one of the questions I'm asked in my class is, should we be afraid about the AI overlord? And I said, no, that's not what we should be afraid of. What we should be afraid of is codependency, because the AI is hacking into the emotional systems of people. So go to replica.ai, and you can create a AI friend that you cannot distinguish from a human.
Wow.
So it's just an amazing technology. So it's creeping up in different things. Anytime that you have an interaction that does not require a visual confirmation of a human is a potential place for AI. So it's a technology I'm very fascinated with. My other big area is in IoT. And IoT is emerging into what is called ambient computing, where the computing is literally non-visible. It's the walls. So more and more, everything is instrumented with sensors and with actuators and with screens and the whole 9 yards. And we'll see more and more of that. But like AI, it's kind of creeping up on us. It's not going to be like a big event. And then the last one I would say is virtual worlds. So the whole idea of, Web3 being kind of three things, is crypto, smart contracts, and then virtual worlds, a la gaming, but in a non-gaming. I think that's pretty amazing. It's still kind of clunky. What I call Second Life 2.0. Second Life was the first attempt. It was kind of clunky. But some new attempts are actually pretty immersive and will be pretty amazing. So.
That's great. We do have one audience question, if that's okay. Let's see if we can. Yes, sir. So that was 2 to 5 year horizon technologies in Florida, right? Vertical specifically. So verticals such as medical, financial, insurance, et cetera.
I would have to kind of think about that for a minute. I mean, definitely medical. The Infrastructure Act that was passed, the $1 trillion or whatever it was that they ended up, that is going to introduce a lot of new technologies and a lot of money for those technologies. So that is one area, certainly. I don't think finance is really going to change much. It's always been a certain percentage of the economy. I think it's just shifting a little bit, so I don't see it there. Some of the older industries, the so-called hard industries like energy, whether it be oil and gas, mining, those kinds of hard industries, I think we will see some lift because some of those systems are so old now that they just can't keep them on life support any longer. I mean, some of them are 30 and 40 years old, and so they're going to be replaced. And much like in Europe, they went from having no infrastructure to having 5G all in one jump. I think you'll see that in certain industries like oil and gas and energy and so forth, where they go from pretty old-timey stuff to really new technology and skip a generation. So that would be my best guess without really
Excellent.
thinking through it.
Do me a favor now, if you could just tell us, Tal, if you're going to be around or how people can contact you afterwards, and when you guys answer, can you, at the end, just tell us if you're going to be around at the show, if they can find you, or how they can find you. Please just let us know, Tal.
I'm here all day, so.
Okay.
And I'm the guy with the funny sneakers. And
there you go. That's how you find Tal. With it. Just look down, red shoelaces.
Look down, yeah.
Yeah, so, I mean, to quickly answer that question, you know, I think Florida has really become a microcosm of the country. I mean, we're probably the size of, or bigger than many countries, right, at 23 million or 22 million people. So I think we're going to see all the industries sort of changing. I think applying sort of even Web 1.0 or Web 2.0 to old industries is still a big topic. So for our fund particularly, we invest in companies in vertical software for more traditional businesses. And so we're often replacing sometimes a clipboard, which is what I would call Web 0. Sometimes it's an Excel spreadsheet. So I think that's still, and then when you talk about AI, most industries, AI really does very little today relative to what it could do. It's still like a cutting edge technology that is very abstract. And so what I think we're going to see, and we are seeing now, is very simple, rudimentary AI applied to real problems in everyday life. And that's, I think, what we're now seeing. Like some of these chatbots and other things, that's the first thing where AI is actually solving a problem that all of us touch on a regular basis. And I think it's going to take probably decades more for us to actually see AI solve real problems, everyday problems that we interact with. It just takes a long time. And the same thing with a lot of other technologies that we see, we see it sort of in the abstract, even crypto, right? Everyone talks about it, everyone knows something about it, but the truth is the real potential of blockchain and crypto is probably still far out in the future, where it's used for, let's say, banks to move capital, internationally and really everyday transactions. Crypto today is really a speculative asset class that very few people are involved in and very few people understand. And we're still far away from that sort of being every day. So that's kind of just my general thoughts. In terms of, I will only be here for a little bit after this. Unfortunately, I have 2 other events to go to today. But you can always email me and reach me, and my email is just mark, M-A-R-K, @lasolasvc.com. So I'm easy to reach that way.
And the shoes, he's got the brown shoes. So.
One thing I was just going to add on, probably the biggest change from AI is actually not going to be in productivity. It's going to be in art. So where the AI right now is really making a difference is in generative art, like actually creating what appears to be paintings that are as good as an artist, in creating music, in creating editorials, in terms of writing. It's going to be in all of the soft stuff, not the hard stuff. And that was kind of unexpected. A lot of people thought AI is going to calculate things and it's going to figure things out. No, its biggest growth area right now and for the next couple of years is going to be in the softer or the more artistic areas.
Well, he just stole my thunder, so that's actually what I was just going to say, because we were actually plug, I don't know if they're in here, but we just had the blockchain panel yesterday, and a lot of that was, talking about how a lot of that technology is, art, music, a lot of the industries, the softer, industries that we probably wouldn't think of first. But I think to answer your question in the audience is that the first one that came to mind for me was healthcare as well. I'm actually curious as to why you didn't say fintech, because I thought that would be your second one, but I think definitely healthcare. And I think, I agree with you in the comment about AI, but I also think, with blockchain is that we are still very far off from what it can actually do, but I think that is going to be huge technology for us as well. And one thing for me is, because this is always top of mind for me, is, AI right now and facial recognition and machine learning and all that, there's still a lot of issues with like diversity inclusion and the people that are writing the code behind it and making sure that they're diverse, that the code is diverse, because there's still stuff like, with facial recognition where there's still a lot of issues around that. And, even with, the data around people even getting, home loans, there's still a lot of issues with those. But I think, technologies like blockchain also, it takes a lot of those issues out. Again, we are not there yet, but I think that is one pretty interesting factor that I think can help with diversity too in a lot of issues.
Just a snarky comment on blockchain. So we have startups coming at us all the time that say blockchain in the first couple of lines of their pitch, and as though it's the kind of the magic pixie dust, and it isn't. And, I don't think blockchain is super amazing. I mean, basically it's a big ledger, except it's electronic. And there's some architectural problems with it. I mean, Bitcoin does 7 transactions per second, only 7. The other blockchains do faster transactions, but it's not super special. So I think that blockchain in particular is a little bit overhyped. In fact, I know it's a little bit overhyped. But some of the applications and some of the concepts, those are the ones that we care about. This is one technology that, it's okay.
Great. Nikki, you want to tell us where can we find you?
Oh yes, I forgot that part. I will also be here all day. I invite everybody to come to the Idea Showcase because I'm very excited about that this afternoon. And I know Tal will be one of our judges as well. So yes, I will be
don't miss it.
Tech Hub booth 656. I'll be there all day. Idea Showcase, then the networking party after. I'm here all day, all night.
That's great. Guys, please give them a hand.